Hi, Tamal. Welcome to Business Standards Banking Show. We are starting a new financial year, but before we look forward, let's look back. How was the last year for India's banking sector?
Well, it's been a great year, I would say. After a long time, you see that every quarter the bank profits are going up and up and up. Every quarter is a record profit sort of thing. So, and how did it happen? Because the net interest income was going up and up because we have a 15% and odd credit growth, which is a decadal high. Of course, deposit growth has been lagging, but the banks have been managing it pretty well till now. So very high credit growth. On the interest rate side, yes, the interest rates have gone up. Reserve Bank of India raised the rate 250 basis points from 4% to 6.5% during the year. But if you look at the bond market, it's not that been impacted. There's not much of that impact. 10-year bond yield, well, it was affected, but not to that extent. So the government could manage well its record borrowing program. Bank did not have to suffer from kind of the so-called mark-to-market losses, too much of it. Of course, the yield curve at the shorter end was much stiffer. They affected more than the 10-year paper. But overall, the banking system has managed well their treasury portfolio in a relative term. Credit portfolio getting better in terms of quality of assets, and also all the banks are mostly well capitalized, and they have done pretty well on the provision side. Their provision coverage ratio, what you call the PCR, has been high, between 80 and 90% for most of the banks. So look at from every angle, the health, profitability, everything. I mean, it could not have been better. I think after a long time, Indian banking system had such a fabulous year.
As I said, we're starting a new financial year. We've just had RBI's monetary policy, where RBI has said this is a pause, not pivot. What are the big challenges that are ahead of our banking sector this financial year?
There are many challenges. I mean, this good time would not continue forever. Challenge number one is on the deposit front. The war will escalate. As we end the year, in percentage term, deposit growth is lagging. We can always say that, well, the pile of deposit is far higher than the bank credit, so why do you bother with percentage term? But even in absolute term, deposit growth is far less than the credit growth, which means what we are seeing, the war for deposits will increase. And as the bulk of deposits get repriced, as you know, that the banks get the advantage of repricing the loan quickly, and the entire loan portfolio gets repriced so that they earn higher interest rate. But on the deposits, only the new deposits attract the new rates, not the old deposits. But as we move ahead, I think by the first quarter of the current financial year, 2024, bulk of the deposit portfolio will be repriced, which means their net interest income, the difference between what they charge on the borrowers and what they pay to the depositors will shrink, which means their net interest income will go down. So that's point number one. Point number two is this, recovery has also played a very critical role in boosting their profit. But the low-hanging fruits have all been plucked. So going forward, the recovery would not be that much. And of course, Reserve Bank of India has said that interest rate, I mean, there's only a temporary halt. We need to wait for the future. It may not be the end of the cycle. Even if, for argument's sake, I say that the possibilities of Reserve Bank of India hiking the rate is not much at this point of time, for argument's sake. But the 250 basis point, what the interest rates have gone up, particularly the retail segment, the borrowers are being hurt. And my understanding is this: there will be new bad asset creation, quote unquote, the slippages, new slippages. What does it mean? The bank's interest income will go down. Net interest income, I meant. Banks' recovery will be far less. And banks will have to provide for fresh slippages. So all this will definitely affect their balance sheet, their quality of assets, and their profitability. So the good run, which we had seen, a fabulous run in 2022-23 fiscal year, will not continue.
Now, obviously, you've talked about this before as well, all the global turmoil that we've seen in the banking sector. How concerned are you about the financial sector stability in not near term, but a bit longer view if you take? Of course, you've said inflation is the big challenge, but how does it link to overall financial sector stability as well?
No, I think if you look at the macro scene, we are far better off than many of the developed nations. Yes, inflation continues to remain a big challenge, but if you see our inflation target and the actual inflation, the difference is far lower than what's happening in US and some other markets. So yes, and I hope that RBI does not lose its determination of keeping inflation at 4%. It should not shift the goalpost to 6%. That's one part of it. About the other macro factors, current account deficit, which was a threat earlier, 3 quarters back or 2 quarters back. Now, as a percentage of GDP, it's now at a tolerable level. So the threat, rupee is not under threat. So these are all macroeconomic parameters, which are pretty good. As far as banking sector stability is concerned, I would like to believe at this point, we are far better off than other countries. Europe and US, you have seen what happened. And it's different from what happened during the 2008, the Lehman crisis. There's a global impact. This time, even the US and European authorities are more concerned. So they have stepped in early to make sure that the depositors are well protected. Yes, bondholders, the so-called tier 1 bondholders, they had to suffer in Credit Suisse. But overall, I think they are managing it well. There's no spillover effect. As far as our banking system is concerned, I think we have some weak points, certainly. I mean, I would not say that every bank is impeccably positioned. They have certain balance sheet. Not everyone's balance sheet is as strong as they should be. Not every bank is as well governed as they should be. There are some pockets of worry, very few pockets of worry. Reserve Bank of India is fully aware of that. But overall, I would not see any collapse in any bank collapse in India.
That is good news. So while the last year has been good, this financial year is fraught with challenges, as you said. Obviously, the financial sector stability is a good news that you don't think that Indian economy is at big risk. Of course, inflation continues to be a big challenge. Thank you, Tamal, for sharing all your insights with us today, and see you next week.
Thank you, Ruchika. Thanks.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.